Okay, folks, welcome to this webinar hosted by FX Street on the 27th of November 2018. I'm sitting here in Bali in Indonesia, and it's rain season, and so it's really wet. But it's lovely. The temperature's nice and it's not too humid, so things are good. But I have a bit of a cold, so I apologize if my voice sounds a little bit off. So if so, please type in a message, and I'll be sure to speak up a little bit more. But I'll be taking occasional sips of water. Okay, cool. Today we're going to talk about my favorite topic, trading and supply and demand. A lot of people kind of tend to overcomplicate supply and demand, but it's actually a really simple concept. I mean, essentially, you have something that's for sale, and you want to make sure that if you're a seller, that you're selling it for the highest price possible. And if you're a buyer, well, you want to be buying it for the lowest price possible. It doesn't mean trading anything, be it a commodity, a currency pair, or bicycles. I mean, essentially, you want to be getting the best deal possible for yourself. So you're selling high and you're buying low. And so when you take this logic and you transfer it over to trading, a lot of people think that, okay, when it goes up, then I'm going to start buying, which is pretty counterintuitive if you revert back to the bicycles example. If you're waiting for people to start buying before you start buying, well, essentially you're getting a worse price. And so what you need to do is you need for price to continue to move higher if you're buying. Let me see if I can draw. Yeah, cool. Okay, this is fine. It's a bit of a thick one. Okay, we'll just use this. So, I mean, if you look at, oops, let's see. Okay, so if you look at this, for example, a lot of people, they'll be looking at this, and they'll see this price bottom, and they'll think, oh, that's really low. And so, essentially, people, hey James, will be looking to, at this stage, sell. Why? Because price is moving down, it's moving lower like so. And so they'll be occupied with the fact that, while this is going down, I want to be selling. But consider how far it's moved. It started here, so this is the S, the start, and this is the kind of the end of the move down here. And so, I mean, beginning to sell when price is all the way down here doesn't really make a lot of sense. If you have a bicycle, you would want to be taking the best price for the bicycle if you're selling, and if you're buying, well, you want to be buying it down here. And so this whole thing about waiting to see what other people are going to do before you do it doesn't really work that well in trading, because if price is moving down like this and everyone's watching it, you never know how far it's going to go. So you have to be able to identify price imbalances, which are essentially disagreements in supply and demand, and you need to be using these as areas where you can see that we have a sudden interest to buy or sell at a given level. And this is essential. Okay, so okay, cool. So if we look at this here, you can see that, I mean, price is moving sideways for an extended period of time. And what is this? Well, this is agreement. People are pretty pleased with what's going on here. Price is going down, it's going up, it's going down, it's going up. So this is very efficient price movement. But notice what happens when price comes down here. We have these white candles, which are essentially something I refer to as accumulation. Accumulation of what? Positions to move price lower. And so when price got here, it moved away like so. And so this would be an interesting place to begin to sell should price return to that level. Why? Because this was where a sudden increase in selling occurred here. So if price comes back up to this price level here, well, obviously, if we focus on what we've seen historically, this seemed to be a really good place to start to sell the euro Japanese yen. And so you essentially put your orders in to sell there, and price came pretty close, and we were reacting at the lows here, and it moved away from there. So this is what you're doing, and it's actually pretty simple. A lot of people try to overcomplicate it and to make it this black art, but it really isn't. It's just a matter of understanding what you're looking at. If you see all of this, this is not supply, and this is or demand. This is pretty efficient trading. Price is going up, it's coming down. We have these green candles. We have a price inefficiency, an imbalance. Price returns to the origin of the move to rebalance the move before driving price high. So this is pretty decent price movement here. And this is, I mean, there isn't any demand in here. They could be on the smaller time frames, but on the weekly chart, I mean, price is just drifting higher. And this could be interest rate, swap differentials. It could be a number of things, but the fundamentals are driving this price higher. And then price moved up here. You can see we reached this high, and price left. And so you think, wow, I mean, this is, if you compare this move here to this price action here, what does that tell you? Well, that tells you, wow, when we got to this price level here, people are very keen on selling. And so you have to keep that in mind. So you might get off and you think, wow, this is a very price sensitive area. When price got up to here, people are really looking to sell. What does that mean? Well, that goes back to the bicycle metaphor. These are really, really high prices for bicycles. And so if price manages to come up there, we're going to sell all the bicycles that we have. Price came close, and it took a few months for price to get back up there, and it finally did. And this is where price released from. And you'll often see this, how price will go up to an area, it'll come back, and it'll contend. We'll have a final push, but it'll often go deeper into the area to find even more buyers, and then price will release away. Okay, so this is what we're seeing. And so what you do then is you when you have this box here, you can see we have pretty decent price trading. Price is going up. Oops, oh no, it's going up and down, up and down, up and down, and then it releases. And this is the place it releases from. So this is your reference point for the future. Just like we saw this clue here, when price went up, it dumped away very quickly. Price reacted, and then it left. Price came down, and we dumped away very quickly. And you can see we dumped away very quickly because these white candles, or this period of accumulation, happened at the lows. Okay, so this is, we're accumulating, we're consuming liquidity, so we are filling orders to drive price lower from here. And this is a very important reference point for us in the future. Okay, and so, I mean, yes, while of course, I mean, price has gone down and people would think, wow, I'm going to start selling because why? Well, a lot of people are starting to sell. So maybe you start to sell here or here or here. But the longer you wait to sell, the higher the risk you are taking on for a given trade. And so you have to be mindful of these patterns, and you can see them absolutely everywhere. And this here, this is a weekly chart. On a 4-hour, 1-hour chart, this is probably going to look something like this. And then you're going to see something very similar. This, let me zoom in a little. This pin bar here, this little white candle, this is probably the same as what we saw over here on a much smaller time frame, maybe a 1 hour and a half an hour chart. And you have the same thing going on here. We have the same thing going on. We have price that's moving sideways like this, and price moves away. Where does it move away from? It moves away. Well, this is the origin of the price move. And you'll find the more you zoom in to the smaller time frames, the more precise you will be able to get your entries. And if we have a look at this one here, I'm not sure if my broker has data because I'm pretty far out on the weekly chart, but I'm just going to mark this from the low to the high like so. Let's go to the 4 hours, see if I've got data there. And we'll scroll back a bit. Where are we? I can't do it there, not enough data. I have to go to the daily chart. It should be okay. And on the daily chart, you can see here. You can see exactly what we saw earlier. The white candles, we saw them here. So we can see on the weekly chart, I mean, price is moving sideways for a pretty long period of time. You can see here, and then it left. Okay, and then you have to go to the small time frame, and you find that area that caused price to move away from this area of supply. And so we can mark that off here. We have it just here. This is a really nice continuation pattern. So continuation pattern meaning that the move happens, price moves sideways for a little bit to accumulate more orders to move price lower, and then it leaves the area. So this is where it happens. So this is going to be an area for us to watch in the future. And price touched there in the future. We had 2 tests, and then price kind of slowly wriggled through it. But we had a pretty decent move. If you consider the size of the area, which is plus, let's say plus some extra pips, about 110 pips. I mean, price went down 500, so 5 times that. So this is a really a good area to trade, because the reward of this area is very high, which is very important for your trading. Okay, good. Let's go and have a look at something else. So we have another one here. You can see price came down. We moved sideways for an extended period of time. And so we have an imbalance, we have a balance, and we have an imbalance. And so you have to constantly kind of be mindful of where these little areas are. Let me use this. So we have this area here, which could be maybe a monthly continuation pattern. Let's have a look. Where are we? So we're just here. You can actually, yeah, you can see pretty clearly that this is kind of the top of a major swing, and then price came down, and we moved sideways, and then we dumped away. So this is pretty accurate. On the daily chart, we'll go back to it and have a look. Sorry if you get dizzy when I do that. I sometimes do. Okay, there it is. Then you can see the area right here. It's a pretty small one. It's taking like the low of it right there. So price moved away. What does that tell us? That tells us that when price returns back to this area, that we can expect price to release and move away from it. And so price did. Price came away, moved sideways, and it came back up closely. This entry might have been missed, and then it moved away from there. But this is exactly what you're looking for. You want to see periods of agreement followed by periods of disagreement. Agreement, disagreement. Find these small pauses in price, because this is where the order flows are starting to accumulate. We're starting to accumulate short orders to move price lower. And this is kind of the tale that is being told when you see something like this. You can see these all over the place. Some are messy and some are clean, but you'll mostly be looking at messy ones than clean ones. This is a pretty nice picture perfect one here. Sometimes you have stuff like this where price kind of, yeah, you can see it's kind of drifting lower, and it kind of releases from here. So this is where price released from. And this is probably more what you'll be seeing on the live markets. So you have something like that. So price came up to it, close, and it kind of challenged it, and this one went through it. But there will also be losers to this strategy as well. So if we keep moving, so we have all these going on absolutely everywhere. We have them. I mean, this little piece right here, this is on the daily chart. On the 15-minute chart, this is an agreement in price. How price is going down, going up, going down, going up. And so price is moving up and down here. So this is where price left. But you have to consider also the major flows, and the major flows for the euro yen, when this happened, let's have a look. Go to the monthly chart and have a look. Well, they were moving low. I mean, this happened just after drop in price, accumulation, and then a drop lower. And so, of course, you'd have to be mindful of what's going on the major time frames. Good. Okay, let's continue to move on. Let's see if there's any questions, because I don't. If you have any questions, just punch them in here. Here. All right, you guys can see those. Good. So we have another one where price, we had an agreement, disagreement, agreement, disagreement. And so, is it difficult to follow me? I'll try and I can provide you with some links to some videos afterwards, which will kind of help slow this down. Something you can watch like a couple of times. Is that okay, Alexander? Right, so you have, I mean, price is moving away. We're moving sideways for an extended period of time, and then we leave. And notice this is a very important clue that we can see here. When price leaves, notice that it comes down here and it comes up. We have this test and then price releases. This is important because this is telling us essentially where the edge of the sell zone is. So we have something in here that's telling us that we have an imbalance in supply and demand. So we have strength on the to the seller side, and so the thin liquidity is to the downside and the thicker liquidity is to the upside. So price moves through thinner liquidity easier. And notice how price comes right here to the edge of here, kind of the lows of this, and it turns around from here. This is really important because this is telling us exactly, more or less exactly, where the edge of the sell zone is. So if we go to a smaller time frame, remember the 4-hour chart. Before I do that, I want to mark off the line so I know where we are. Where'd we go? Okay, here. So we have it there. Let's go to the 4-hour chart. We have a look. So I can find that. Lots of pain with MT4, having to race back and forth like so. Here we are. Okay, so price comes back and it comes up here. We accumulate. You can see these candles just here. Oh, it's all over the place. Here, I'll just leave it like this, put it in the middle. So we have price moving sideways for a period of time. So we have agreement, disagreement. And we have here, this is pointing to the edge of the sell zone. So this is a very important area for us in the future. So essentially you can mark off, for example, the high, like so. We'll just put something like this. Then this will be a reference point for us in the future. And you can see how price came. It came into it. You can see how price moved into it. And now we started to feed on this liquidity. We started to consume the liquidity. And then price moved away from there. Price actually spent a considerable amount of time at that area before it turned around. But you can see this little tiny pullback is pointing to the area that you should be considering to sell at. So we have the origin, which essentially is we have kind of a V shape. We have a move higher, then a move lower. So essentially you want to be looking towards the top. You want to look for these releases and then tests and then departures. Test and departure. So we had one here, and we had another one here. Okay, so we have these two, and so these are two very interesting areas for us. So we marked off this this entire area here, and this is essentially where price moved into. Price poked into it. Excuse me. Sorry. Price moved into it. We started to consume liquidity, and from there, price managed to move away. And so it's a pretty, I mean, it might look, Alexander is saying it's difficult to follow. I mean, initially it is difficult to follow, but you have to remember that, I mean, trading is like riding a bicycle, learning how to do this, a ramp, a skateboard. I mean, it just takes practice, and the more you train yourself, the better you're going to get. And it's not that difficult. You just have to look for these agreements in price, agreement in price, disagreement. Where is a disagreement? Where did it originate from? Here. We'll just mark off this whole area here. So this is an interesting area for us that we can expect price to bounce at in the future. You see price came down to it, almost to the pip, and it left. And it looks like magic, but it's not. It really, really isn't. You can see we have another one. Let me remove this one here. We have another one down here. Now price left. We had a period of agreement, and then price left. This is essentially kind of a micro structure of this. So this looks like this on a smaller time frame. Okay, so we have this one here, yet to be tested. You keep going, and you can see these white candles. I mean, they are also these micro patterns. I refer to them as accumulation. So we have this one here, which is essentially the same as this, which is essentially the same as this, just on a smaller time frame. Where did price come back to? It came back to that area there, and it released. Okay. Good. Okay, so a lot of people ask, well, can you automate this? And the short answer is yes, you can. For the past many years, I've been attempting to automate supply and demand trading, and with various degrees of success. But about the past year, I've managed to come up with something that seems to work pretty well. It's still running on small live accounts and many demo accounts so that I can assess its progress. But it's essentially trading based on these same patterns. And so it's looking for patterns like this, and it is based almost precisely on the software, the indicator that I've written here that's showing me these levels. And so we have this one up here. This is the daily area of supply. We have this orange one here, which is weekly supply. And within it, we have a daily supply that's nested. And so I made this an algo trader to help me test the validity of these areas. And so the algo trader would simply run through all of these time frames on all of these currency pairs, and it would place orders with various parameters that would enable me to see which parameters make for valid entries. And it's working pretty well. And you can see, I mean, this is a very good example. Here we have the weekly area. So essentially, if you're going to trade this, I mean, you would be marking off. I mean, initially you would say, well, I'll be marking off this, but you have to look at the pullback. And here we have the deepest, the highest high since the release, which is here. So this would be the area that you'd want to look to sell from. So this is the beginning of the sell zone, and the sell zone continues higher. So from here and up. Okay, and we can just put it to the edge of the zone, because this is what the software wrote, like so. And price came in here, and if we can zoom in a little bit, just to see how price reacted when it came there the first time. As the price moved up into it, we poked into the area. So this is the beginning of the sell zone. You can see the line there. And we accumulated just below the area, and then price popped up, and we came back down. We accumulated, and we sold off. The price came back up. We reacted on this. This is a micro pattern, so we have disagreement, agreement, disagreement. Price returns to the area of agreement, because this is where the orders are accumulating to move price higher and lower. And for this particular pattern here, this is an area that people were very interested in selling at. And this was also nested within this daily area that we identified on the daily chart. And so price tested up here. We moved higher. We kept trying to push higher like we saw in the previous example. We moved higher. We moved a little bit higher, a little bit higher. And so we're trying to find people who are looking to sell, and we found some here. So the next test, we're going to have to go at least that high. We went here. And the next test, we're going to have to go at least that high. We went a little bit higher, and this is where price released from. And that's why you'll often see you'll have a level like so. Then price will move up to it. It'll have another go, and it'll have another go. And this is where the three tops, 1, 2, 3 pattern comes from, where price is essentially feeding into pools of bearish liquidity, and it's constantly looking for people to sell. This is it's advertising a really high price to sell at. Is this a high price? Well, this is a high price. We have a little bit of interest, but not that much. Okay, we'll advertise an even better price. So it went up here. Oh, we got a little bit more, but not enough. So we advertise an incredibly attractive price to sell at. Price goes up there, and this is where people essentially jump in and start to short the market from there. And you can see this. And it's happening over and over and over and over again. Here we have another one. Price came down. We have a sideways price movement. Price releases. So we can see that we have a very keen interest in selling from this area here. And so we should be seeing these, and we should be mindful of these on whatever it is that we're looking to trade. So we mark this off like so. And keep in mind we have the pullback here. You see how price comes up, it goes deep, and then it releases. We move it up to there, because this is the beginning of the sell zone, and it goes up essentially to the highest high of the area. And then this is where price released from. Okay, and you can see, and so when you're looking at, for example, something like this, let's say, let's just zoom out, and all we can see is this. When you see that, I mean, there's nothing to do. There's absolutely nothing to do. So it's best just to walk away and look for something else. Of course, we had a little bit of an imbalance there, a little bit of imbalance here, but I mean, there's nothing really going on here. We still need to return to the lows here and return to the highs here. And so as long as price is trading within this range, you want to be selling at least from the highs and above, and buying from the lows and below. Sorry, frog in my throat. But it's just a really bad idea to mess around with price when it's looking like this. You have to look for these sharp releases. How you can have like a test. Price comes down, we accumulate, and then we release. So this is where price released from this area here. You see it everywhere. We have another one here. Price came down, we moved sideways, and we left. So this is interesting for us in the future. Price went up, we accumulated, we went up again. Interesting for us in the future. We look at this. This is an extended period of agreement. Price rallied, we moved sideways, we moved higher. Price poked down into the edge of this area of agreement, because this is where the buyers enter the market. They thought, wow, this is a really good price to start buying. If price comes back down to this area here, then I'm going to start buying because I got a smoking deal in this bicycle. So it happened once. The second time we went roughly to the same low, then this is where we left from. We have the same thing happening here. Price comes down, we move sideways, and we leave. This is a micro demand. Price came back to the area because we had an interest in buying at this price level. Price went up, we moved sideways, we moved up. And you can see this going on all day, and it happens on every single time frame. You can go to the minute chart. Maybe it's a bit difficult on the spot FX and the minute chart. We'll go to the 5-minute chart. You can see the same thing happening, where you have price moving up, moving sideways, and price left. Where did it originate from? Well, you look at the candles that left. Those are the green ones, and mark off the lows. Let's mark off the lows like here. Then you look at the candle that left and the highest high, so the pullback, which is here. You see just here, right there. So this is the area that the price is telling us that people are looking to sell. So this is the edge of the sell zone. And so this is your point of reference in the future. And I'm cherry picking a little bit, just to drive the point home, but notice here that we had this period of volatility, likely some news. Price came up, and where did it go back to? Well, went up to this one here. How price came up, we're moving sideways. Let me zoom in a little bit. Price went up, we moved sideways for a period of time, and then we left. When price left, first of all we mark off the lows, and this is pretty much where price came back to. So this is an area that we could be looking to sell at when price comes back to it. And price poked up into it, and this is where we released from. And note that they normally hold well the first time, but the following tests are lower probability, and this is because I like to refer to this as plates of pancakes. I'm just going to draw this because this is what I normally like to do, where you have we have pancakes here, and we have pancakes. We have the first pancake is here. I'll draw all the way over, like so. We have the second one is here, third one, and fourth one. Yes, we have pancakes right here. Yum, I like pancakes. Good. And so you have to consider that when price comes back to it the first time, think of it as a person coming with their fork, and they take the first pancake. Okay, if they take the first pancake off this stack, I mean, where's the next pancake located? So here's the first pancake. Once that's gone, where's the next pancake? Well, the next pancake is here. And so you're going to have to put your entry a little bit further up into the stack of pancakes until you actually find a pancakes that are there. Because once this pancake is taken, it's gone. Once this one's taken, then it's gone. And so now, once this pancake and this pancake have been taken off the plate, well, if you want a pancake, you're going to have to move your fork deeper into the stack of pancakes. I hope you understand my pancake analogy. I like pancakes. Like that. Okay, so the fork has to go a little bit deeper into the stack of pancakes. And the same applies for the for down here. How we have pancakes like so. So we have people that are looking to get some pancakes. This is a fork. Once this one's gone, the fork has to go down to this one. And once that's gone, it has to go down to this one here. Okay, and so this is why you'll hear supply and demand traders say that if price has been tested one time, don't test it again unless price has a really nice superficial test. So if price does this and it comes down, it comes close to it, and then it leaves. As long as it doesn't kind of move into, as long as it doesn't start consuming pancakes, taking pancakes, well, then the pancakes are still on the plate. And so should price come back at a later time, we can assume, again, it's a game of probabilities, we don't know for sure, but we can assume due to the distribution of liquidity in a market that the pancake is going to be located roughly at the area where price departed from. Okay, cool. Okay, good. Well, I'll show you just for some fun. I'll show you the algo trader that I've been working on for a while, and I'll show you some of the trades it's got on. I just funded this small account here so you can see what it's doing. Just gonna have a look at these. These are 4-hour areas of supply. So if we drag this one on here, this is the pound American dollar. Let me zoom out a little. So this is the area that the robot found to be interesting. It saw this and it said this is a nice area, and it is a nice area. You can see how price left. We came back. So price is an agreement, disagreement. Okay, where did it release from? It released from here. So this is the place that we're going to look to sell. And notice that the robot placed the entry at the high of the test prior to the release, because this is where the next pancake is going to be located. Okay, have a look at this dollar CAD example. So this one is yet to be filled. So this was a buy. So we had this period of agreement. Price left. This is a really nice push higher. And price didn't quite make it back to the entry. But we tested it once, twice, 3 times, and then we found willing buyers, and then price moved away from there. But this is a really decent area, but price has not been into this area there yet. And so I'm going to leave this one on to see what happens. And we have a look at the dollar franc, see what's going on there. So we have the same thing going on here. How we have a disagreement, agreement, disagreement, agreement, disagreement, a lot of agreement, disagreement. Price came back down roughly to the area and it left. It did not poke into this area. What I don't like so much about this is that there's a relatively long period of disagreement. And disagreement essentially means that, let me draw. So if we have pancakes above price, we have pancakes below price. So price comes in, let's say this is the open of the period and this is a close. Price comes in and it moves up and it starts to eat away. It starts to take not whole pancakes but bites of these pancakes. So there's a bite gone from the bottom one, a bite from the top one, bottom one. So eventually if a large number of bites are taken out of a pancake, well, there's not going to be much of a pancake left here or here. Okay, and so when you see this going on, this is essentially telling you that we have bites of the pancakes that have been taken. And so we might want to look to move lower. So this one that looks a little bit more interesting, potentially like this. Okay, price went up, we accumulated, we went up, we came down, we're pointing to the edge of the buy zone, and then we moved sideways, then we left. But when price came down to here, it didn't leave quickly, so I would likely move my entry for this lower, because there's nothing really in here that looks too terribly interesting. Maybe something in here on a smaller time frame, but nothing up here. This is not looking too interesting for me. We have a look here at the euro. Excuse me. We have a look here. Okay, we have agreement, disagreement. That price is just returning God, I got a big toad in my throat. To this area here, we could expect price to have a bit of a bounce, because when price was here, there was a lot of interest in selling. So we'll see what happens when price goes there. Let's take one more, then we'll wrap it up before I croak here. So if we have a look here, we have a tiny area all the way down up here where we have disagreement, agreement, disagreement. When price returned, it came here. Let's be more precise. It came back to here. And it released from here. So if we look back, I mean, price has not been back there since the release. So this would be an interesting area to consider should price return back there. Yeah, and so you can see as well, I mean, here we have agreement, disagreement. So you mark off the lows like so, and you look inside this area here and find out exactly where this disagreement occurred. And you can do that. We go and have a look here. You can see that, I mean, here we have it. This is the line, and it kind of originated from here. Price does disagreement, agreement, disagreement. And so this is kind of a small area. It's probably clear on the smaller time frames, but I won't drill down because we're running out of time. But we have something here, and we have something up here. But this is a little bit messy. I don't like this so much. But we have this one up here, which looks okay. Good. All right. Yeah, and if I just show you like in the results of the robots so far, if I just take all the trades, is that good, Adam? Replace this and chuck it up. It's done tons and tons of trades, and the position size have been tiny the whole time, just so I can kind of gauge what's going on. You can see, I mean, most of these are cancelled, and this is because orders are cancelled. They're set to expire after a certain number of periods. I just don't want orders sitting in the market the whole time. You can see some of these get filled. We found a few. Here we had a few that were filled here. If we look at the results, I mean, it looks pretty interesting. Yeah, but it's still kind of early days, but it's a really exciting project. But I'm actually using this now on with my own trading, and I let the robot run, and then I go in and manually look at what it's done. Then I'll perform my analysis to find out if it is actually a trade I'm willing to put my money on the table for. But it's looking pretty interesting. It's looking very, very interesting. Good. Let me find these videos here that I promised. YouTube, my videos. I promised that there was one. Okay, here. So it was, okay, good. So this is let me just paste this in. Don't want to watch this now. Where is that? Okay, here. So here is that video. This kind of goes over the that particular strategy. And it's really, really simple. And if it feels complicated, it means that the market's probably not clear. They should be jumping out at you. And you can see agreement, disagreement. You need to focus on the origins of these moves, which are often going to be in disagreement. This is beautiful here, how price came down, accumulation. So disagreement, agreement, disagreement. This is lovely here. We have, this is also okay, maybe a daily area, but try and focus on the stuff that's clear, and just drag the pairs over and force yourself to see what's going on. And you can see, I mean, we have a lot of agreement here and this whole move. The only disagreement that we see here that looks interesting is up here. We see agreement, then price broke away. This is also, you can see how price was agreement, but it left, but price has kind of already been back to this area back here. So this is an area that has been visited historically. So this is a lower probability trade. And so you want to look high. When price comes back, this is exactly like those little pullbacks to an area. So this is actually telling us the beginning of the sell zone. And so essentially you'd want to start to look to sell from here, which brings our attention to this one here. But higher up we have this one, which is even more interesting. Agreement, disagreement, agreement, disagreement. Okay. I think we'll wrap it up there before I have another cough fit. I'm glad I can't give you my germs via webinars. Good stuff. Well, if anyone has any questions, you're welcome to send them to me. Let's put my email in here. And Pipnotic is just it's a software company based in Malaysia, now Malaysia, and I just develop supply and demand software and also a bit of currency strength software as well. But supply and demand is my primary focus, and the algo trading we do is based exclusively on supply and demand, and it's really interesting. And if you want to come and have a close look, you're welcome to. I can let you come and have a look at some of our rooms, and you can kind of gain deeper insight into how powerful this supply and demand stuff really is. But it's naked charts. You know, you're focusing on the agreements and disagreements, and essentially you're remembering that you have to take your mentality when you're buying a bicycle with you when you're investing in, or not investing, day trading currencies, for example. This is just a very, very important point to make, I think. Good. Well, if no one has any more questions, I think I'm going to wrap this up for today. But again, if you have any questions, please feel free to shoot them off to me. Otherwise, have a super week. FX Street, thanks again so much, and I will see you all next month. Thanks for watching, everybody.